We're live. Really? Right, we're just setting up, guys. How do I forward this on? Oh, yes, of course. Forward this on by clicking on that. Excellent. That will do nicely. Perfect. And he went off. Good stuff. Alright, so yes, also follow on a YouTube. Right, just waiting for everyone to arrive. Right, we will start in about a minute. Hey, hello mate, how are you? It's good to see you're live, logging in. How's the sound? How's everything when you are on YouTube? Is it okay? Well, let's kickstart this. Anyway, let's get this going on. Right, let's start. So 1:15. So we can be done by about 2 o'clock, which is good. Right, let's share the screen. Let's get stuff going on. There we go. There's that, and there's that. Excellent. Done. Hello, 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 everyone. Hope you're well. Hope you're doing all right. Hope you're winning. Galaxy S9 Plus. Excellent. Right, yeah, we are live. We are live, yeah. Good, done. Let's get that on there. Oh, we got some followers. Yeah, sounding's good. Oh, good. Sounds really good on here. Yeah, it generally is, isn't it? YouTube's pretty decent for that. Zoom's good. So I've got Zoom on one side. I've got YouTube on the other. Let's go. What's going on here? Let's. Don't want to record it on there. That's a bit annoying. Yeah, screen sharing. Yes, that's screen sharing. Let's click more. Pause recording. Stop recording. There we go. Get rid of that. Hello, Abdul, Accumulate Trader, Carla, David C, Big C's in the house, Gondi. That's a good name. I like that, Gondi. I think that's one of my mum's. It reminds me of my mum's favourite movie, Gone with the Wind. Gondi. It's a good name. Mr. Asalan. Sorry, Mr. Asalan. Yeah, Asalan. That's right, isn't it? I want to make sure I pronounce your names correctly. Mr. Asalan. Asalan. Good, good, good. Like it. Good day, good day. Some of your nicknames that you guys have got, they crack me up. Accumulate Trader. So serious. What are you accumulating? Wealth, cars, skateboards, marbles.
Gold and silver, baby.
Oh, yes, we like it. Gold and silver. Good choice, sir. Who's Galaxy S9 Plus? That's a good name. Have you got like a real name? Like, I don't know, Dave or something, or Big D? It's a bit flat, isn't it? It's a bit, hello, Mr. Galaxy S9 Plus, how are you? You know. Where did Alex come from? Oh, he came from the shop, the discount shop. You know, the 99p stores? You know, you get everything under £1. He was a bargain, I tell you. Cheapest thing you've ever had in your life, bar none.
Are you related to Sir Alexander Fleming,
Um,
the penicillin guy?
oh yeah, the penicillin guy. Yeah, no, a lot of people say that as well, don't they? No, no relation.
No, no relation.
No,
Not like great grandkid or something.
no, nothing like that at all. No, but it's
Hmm.
quite common. I mean, Alex is a really common name, isn't it? Why is there a dude named Samsung Galaxy? Oh yeah, because I think that's obviously when they set it up on their phone, isn't it? You can right click on the name, I think, or go to your profile and change it to something else. It's nice to have a name, but I mean it's not necessary. It's just me being I don't know what's the word, facetious, particular, picky, control freak. So no, whatever. Into Black, Chris. Oh, look at that. Nice. Welcome. Jeff's got his eyes on you. Tony's always on his iPhone. David Stringer, hello. Oh, we've got two Daves in the group. So Friday, welcome. We'll make it short and sweet. Good morning, guys and girls and traders on both YouTube Live and on Zoom. We're just eyeing up pound yen at the moment and pound dollar. There've been some good moves on both. Pretty much done what we wanted them to do, really. Let's take a closer look at the GJ. And if you have any questions, please ask. I'm going to go through the strategy that I implemented on the pound yen. It was the divergence strategy. Now, I got into it yesterday. A bit premature, it seems. I noted it I haven't updated my journal. I was going to update my journal today with you guys. Because, I just wanted to highlight that it doesn't always go, you know, without a hitch. You know, best laid plans. It was the right idea, right sentiment, recognised the divergence in play, and it was all good. We risked 0.5%. The stop was perhaps too tight. We literally put it on short at 141.80, and the second that we put it on, it just spiked up. Pretty much done within 15 minutes, and it hit our stop. And the price went up to around the 20. So I said that divergence in play unless price breaks above 142.30. Price spiked up at the US Open. So I noted here in my journal that maybe entered too soon, maybe the stop was too tight. I mean the strategy worked. It wasn't void or made invalid. It was just me jumping in too soon. And the reason it makes for a really good example, and why I'm sharing it today, is because obviously a lot of people ask. There's a number of courses out there, and a lot of people ask the person who created the course or strategy or whatever. Always ask them, for further details. Some traders seem to want that blueprint, want that step-by-step instruction of, when to enter and when to exit, and very much want it to be almost systematic, automatic, robotic, mechanical. And I think to a certain degree it is, but you can appreciate that with trading, it's not an exact science, and we're human, and so things like there are variables that you have to consider, like the timing. quite clearly. The timing on this trade was too soon. It moved today. It didn't want to do it yesterday. It wanted to stay stubborn. It wanted to stay up here. If you look at the hour, it went, tested it once, twice, 3 times, 4 times, 5 times, and then it fell. Okay, so it needed to consolidate up here at the higher fib extension levels before dropping back to retest previous structure around 141.38. So that's why my target was 141.40. So using divergence, so you see 3-wave divergence here on the 1 hour. So let's talk about the divergence again, just so you're crystal clear. Now, it's not a lagging indicator, it's just an indicator, because I know some people don't like using indicators and they have a bit of an issue with that, which is fine. You want to be naked in your charts, naked price action, that's fine. All this does, it's very similar to what they call an awesome oscillator or awesome indicator, can be found on TradingView. Check it out. Settings are, I think they are default 5 and 34. So all this is really is just to highlight the volume, just to help gauge the volume. Now, some traders wanting to be fancy will have a very similar volume indicator up vertically placed on their chart. So up here somewhere on the side, either to the right or over on the left, and it just kind of looks cool, right? Gimmicky, cool, same thing. Don't want it on the chart though, don't have to have it on the chart. I'd rather not have it on my chart because I've got lots of multicolours on here. It's like Joseph in a Technicolor Dreamcoat here. Look, it's like firework displays going on up here. You need your sunglasses to look at my charts, you know, so adding more to it. People have already said to me, can you not use white charts? A lot simpler. Because they take one look at my charts here and it's like, whew, too much. So I have, for the benefit of those people who are special needs, you know, we make what's the word? We make allowances for those people, which is absolutely fine. Joe, you know, I'm being a bit sarcastic and having a laugh with it. You gotta have fun with this trading, because you sit here all day looking at charts, you know. So yeah, there you go. Pound yen, nice and clean on a 4-hour chart. Highlighting the divergence, highlighting the extension levels rather, and what we're looking at. So we have these 2 different pumps, 2 legs up here. The first one pulled back, double top, pulled back, had another go and broke on the 3rd attempt, which is nice and clean. And then where did we get to? Well, we extended up to 142 area and we stalled. We tested it multiple times, which you just saw on my 1-hour time frame. And then obviously we were then looking at my divergence here, so 3 waves, so 1, the volume was less, it was decreased despite price making a new high here. So just to get you another line, let's put another line on here. After divergence, do you enter when the first histogram form in the opposite direction? No, I think this is what we're talking about actually. It's about timing. Sometimes you just have to wait, be patient, wait, put a decent stop on, and you know, we could have just waited for this morning's London session to make our money, which is what I did, but I just did a 1-to-1 risk to rewards. I just did a 40 pip stop this time and a 40 pip target, entering again at 141.80. So yeah, this is, you know, that's what I'm saying. It's not an exact science. It's just sometimes you just have to time it. Generally, my timing's pretty decent. It's funny because I put the trade on just before it moved. I just felt that it was going to move, and that just comes with experience and instincts. And speaking to Chris and others, yeah, patience is all that was needed, really. And sometimes I think when I'm speaking, it might just be too much knowledge that people don't get it. So feedback's really important from you guys, so I appreciate all the feedback. If you don't understand something, you just say, I don't understand what the hell you're on about. So yeah, with this divergence, you can see prices going up. So understand first the basics of divergence. Price is going up, but the volume is going down here. And so you have these lines sort of highlighting and saying, hang on a minute, the volume's lower. So in terms of entry, someone's just asked about this candle, I'm assuming, this bar, I'm assuming, the first red bar. I've got two elements to this particular piece of software, this particular indicator. I have a green candle, which is a light green and a dark green. So the dark green starts to indicate a bit of volume tailing off, and it's highlighted up here as well. So be mindful, but also don't worry, we're still in the trade long, it's still bullish, but you know, just check your levels. Check, is it retesting a certain area? Is it at a key area? It might just mean that it might just run out of steam in a minute. So just, you know, be mindful of that. And that's what it does. It just allows me to look at what's going on. Then I have a little green dot on the 0 line. Then I have a red candle. So you have a red candle, green dot. So we're still not quite there yet. So there's about 4 parts to it. So it goes from bright green, green dot, to dark green, green dot, red, green dot, and then red, red. Red dot, red bar, and it's sort of confirming. But often you'll find that that's a bit too late when it does that. But that's just that extra confluence for a bit of peace of mind. Because then straight away we dropped below the 0 line and we started going below, and we've got the divergence showing, and it's just saying, well, hang on, this is bearish. And sure, you know, when you caught this move down, if you were in it and you're seeing it change down here as well, it might just add that extra bit of peace of mind, that bit of extra confluence, that reason to stay in the trade and say, well, hang on, yeah, I think I might be onto a winning trade here. Might have entered just at the right time. So that it's handy to have that. So 3 wave is just this. So we've got the volume going up here, we've got lower volume here, lower volume here. So 3 wave, which is powerful. 2 waves are okay, but 3 waves more powerful. And then we didn't really have any volume here, it tailed off. But this is why I took the short here, because we had the 3 wave, and I thought, okay, 3 wave, extended, really good. I think I got in, which one did I get in at? I got in at, let me see, 2:14. So stock market's open at 2:30 New York, London time. New York time's 9:30. So about 15 minutes before the US Open. So which candle is that? That would be this one, I think. No, not that one. That one? No, not that one. Would it be that one? No, we're still too early. This one. I think it's got to be this one, surely, because that's where it pumped up. Because we were pretty much in as it was about to make a move, but unfortunately it did the move spiked up instead of spiking down. I was hoping it was going to give us an instant sniper entry bosh to the downside and just make our money like this. He didn't want to do that yesterday. He thought he'd just piss about a bit and test our resolve. So, of course, it happens sometimes. And it happens to everybody. It doesn't matter who you are, whether you're Mr. Market or Mrs. Market, it happens, right? So, what can you do? So you just review it and say, well, what should I have done better? Well, I should have maybe been a bit less complacent. I felt that maybe I was a little bit cocky, a bit too relaxed. And the reason being that I'd already made my money for the week and this was a bonus trade. But still, I think that just allowed me to be maybe a little bit more chilled with it. And I thought, okay, let's just stick a stop slightly above all this current price action, and if it's going to go, it will just go. And it didn't. It wanted to go up first and stop us out, and it actually went up perfectly to around that 142.20 area. Now the pound yen likes a 30 number, so I should have put the stop at, say, 35, for example. You know, somewhere up here, out of the way of all of this, in hindsight. But then it would have drastically reduced the first target in terms of risk to reward, and it was all off. So, you know, better to have maybe not place the trade at all, because these are the sort of trades that you could just end up taking and losing money on because they're just not really necessary. But then had it worked, I wouldn't have said anything about it. So, you know, you can analyse it and overanalyze it and then end up just not doing anything because it leads to analysis paralysis. So that balance is, you have to strike the balance, right? So I believe in the strategy. The strategy generally works. It worked. It still worked. I entered too soon, but it worked. It played out. It done exactly what I said. It would have been invalidated had it have broken the highs and gone up and tested 142.30. Never got up there, so it was still valid. So shorting anywhere from 142 to 141.80 was still a good area to enter. And I know some of you did take this trade and shorted it. And that was really kind of cool to see, actually. It was kind of cool to see that you were, you know, you got that kind of like fearless go-get kind of attitude and think, actually, I've got some information here that has been provided to me. And they've gone away with it, and they've used that information, and they've made it work for themselves. And that's kind of cool, really, because I had a bit of a chat with Chris, and Chris was like, we're not a signal service. See, he doesn't like me sending out the signals. So I've sent a couple of signals out on the pound this week. I'm just trying to share and be helpful. And he sort of frowned upon it. He says they're here to learn. Fend for themselves. You know, which he's got a point. He doesn't want to just become a signal service provider. He's very mindful of that. So I do get that. So yeah, maybe I took it too far. Who knows? But yeah, there you go.
Just to add on top of that,
Yeah.
so majority of signal services, at least the ones that I was trying out, like probably like 2 years ago or a year and a half ago,
I know what you're gonna say.
like their risk to reward was completely off. Like
Ye-
you'd be risking
yeah.
like 5 to 1.
Yeah, I know. Some have. I've seen the signal services. They're generic in their stop losses. Like one that I see, they are a signal service. They have a set process. They're consistent. They're consistent in how they present, and their stop loss is always like 60 pips. And then they have a T1, T2, T3. T1 is like 20 pips or 30 pips, depending if it's a major or a minor, or what kind of forex pair it is. Then the next target might be like 50 pips T2, and then it'll be like maybe 100 pips or something like that, or 120. And they are very consistent in how they do it. So I like their format, brilliant. But my argument, or my point, quite clearly with what I was saying to Chris, is I don't just provide a signal. I provide the analysis. I provide the reason. I'm telling you which strategy I'm using. So to bolster that, the signal is the last thing I do, because the 80% of what I'm doing is sharing what I'm doing. But then I need to give you some kind of, I need to give it to you live and say, right, I'm actually entering here. This is my stop. This is a reason, etc., etc. So it turns into a signal, but it's more than a signal, isn't it? It's what's behind the signal that's supporting it, that's propping up that signal. So maybe there should be another word for signal, like trade idea, which is what people do, but I see people doing that on Instagram, and the reason they say trade idea is because they're worried about getting sued or being liable or God knows, and they put these disclaimers there saying, don't follow me, I don't know anything, I'm just giving you a signal for the fun of it. But join up to my commission structure so I can make money off you. Insta scammers, that's how they do it. So it's like, I'm not going to be compared to them or belittled, and so that's very important that I don't do that. So there needs to be kind of another conversation had about what I share and how I share it, I think, in terms of the format. Because it needs to go much deeper than just saying, buy here, sell here. But that, in essence, is what we do. And if you watched from 2 days ago, the live video, I talked about the role of a trader and the role of an analyst in a bank. And I don't know what perhaps there are misconceptions as to what you think they do. Maybe you've watched too many like Wall Street movies with Michael Douglas and Charlie Sheen. But literally the trader site says, right, I've got all this money, I'm going to buy here, sell here. He doesn't answer to anyone. He doesn't go to his manager and say, is it all right if I buy it here and sell here? The manager will look at him and go, what are you talking about? Just do what you've got to do. Get on with it. You've got this money, buy here, sell here. Let me know when you've made your money. And then the analyst comes along, and the trader tells the analyst, not the other way round. Says, right, I'm buying here, I'm selling here. And then the analyst will say, okay, cool. I need to now present this in such a way that I can email it out to our prospective clients, followers, potential investors, maybe come up with some lovely glossy folder where we've put some lovely information about returns and all that sort of stuff, and just fluff it up a bit. Because you can't say, yeah, the trader's just buying here and he's selling it here. And that's it. But yeah, there you go. So yeah, can you watch the previous videos? Yeah, you can. Yeah. So modern day Robin Hood. Yeah, I look pretty fit, pretty hot in tights, man. My green tights, a bit tight though around the yeah. So anyway, we'll do it for a year, 18 months. I said that, after which we can just go and do my own thing. But I tell you, I've been doing it 2 weeks. Well, we've been doing it since last year with Chris, but we're really taking it on board now and really speaking with all of you privately and engaging all hours of the day and night. And my daily routine has gone out of the window, partly because of that, but partly because of the lockdown as well. So I thought we'd make the most of it. But I have to say, I'm pretty exhausted. I'm knackered. Today I've just been walking around like a zombie. I don't know if I feel a bit ill or what. I don't usually get flu or ill or anything like that. I don't get it every year. It doesn't happen. But I think it's just doing a bit too much maybe. But yeah, there you go. See how we get on. After this, I'm going to go sit my ass down and watch a bit of TV and not move for an hour or two. Yeah, but yeah, there you
Just a
go.
question for
Go on
you,
then. Yep.
Alex. Since you've traded, because like Martin Luther King coming up, Martin Luther King Day on Monday. So
Yeah.
I know there's low volatility in the market for the U.S. Is that the same thing when it comes to the pound pairs?
What do you mean by yeah? No, if there's a bank holiday or any kind of holiday, then it has a complete knock-on effect. If it's US based, or yeah, generally, yeah. Is it in the US? I haven't even checked.
Yeah.
When is it? Is it Monday? Is there a holiday on
Yeah,
Monday?
it's in the U.S.
Oh yeah, so it'll be dead on Monday pretty much. Yeah, there might be some impulsive move during the London session, and then it may go quiet for the rest of the day. Because you have to appreciate the US is the biggest economy in the world, and so that it just seems to be the case. I know that Forex though, for Forex, London is the central hub for Forex, and that's where all the transactions are predominantly made and done and handled throughout the day. It's during the London cycle. So yeah, I think they account for something like 40% of the transactions that are done throughout the day during the London session. So yeah, just have to kind of look. It's sometimes it moves, sometimes it is dead. But if you have what I say, quite simple, if you have a public holiday in your country, and you've got things planned, like when there isn't a lockdown and things are normal, and you can enjoy a long weekend, take it, because that's supposed to be the part of your pros and cons of being a trader, especially a retail trader. A trader in a bank can't just take these days off. So when there's a holiday, they can't just take days off. So when there's a holiday, bank traders will take time off, will be off naturally during those days, and you should do the same. Don't feel compelled to have to trade. I definitely take the holidays when there's a day that there's been given for whatever reason. Yeah, I don't want to be looking at my charts. I probably will end up doing a bit of charting, looking at stuff, maybe a bit of admin, maybe work on the psychology podcast that I'm doing. I need to update another one, upload another 5-minute session to it. So yeah, you do things, but you get my point. Just you use your time wisely, so that 80%. I always say this now. 80% of your time should be for yourself, personal development. 20% should be trading. 10% buying, 10% selling, whatever. But just focus on 80% doing everything else, sitting on your hands and working out what you're doing and making sure that what you're doing is correct. And 20% trading. If you're spending 80% of your time just trading, that's like 4 out of 5 days of a week. You're just sat trading, and you're not leaving room for anything else. And you can't do that. Or it's not recommended. Put it that way. It's unadvisable to do that. That is one of the pros of being your own boss as a retail trader. You're not working for a 9-to-5 company. You're not a trader in a bank where you have to be there working 8-hour shifts, 10-hour shifts, 12, 14 hours, whatever. So, enjoy that and don't feel guilty about it. Celebrate the fact that you are your own boss and make your money on your terms when it suits you, and embrace that and go with it. So it's really important that you do that. So yeah, there you go. So yeah, this is the trade.
Noted, my good sir.
Yeah, no, yeah, you know what I mean. Just go with it. Just enjoy time when you've got it, especially family time or other time. I think that's really important. Make memories, and yeah, that's it. Life's a bit too short, precious. So yeah, this was the trade. Divergence. It's worked out. Played to a T. I took it again, and I'll update my journal now and just put that on there. Target's done. 0.5% risk and 0.5%. Yeah, just that's it. 0.5%. I just made 0.5% back. Really, what I lost yesterday, and I took it at bang on at 140, 180 this morning. So any more questions? Or any questions? Does anyone, do you need an explanation as to the divergence? What we're looking at? Somebody asked me yesterday, what's my favourite strategy? And I said, it's the divergence strategy. And I said specifically, it's the 1 hour chart on the pound yen. And we, straight away instinctively knew that there was a potential setup there. We went straight to it and had a look, and I put a trade on within like a minute of saying that. And that's pretty much how we got in. I just saw that there was going to be something happening here, a move. So there you go. Unfortunately, it spiked the other way pretty much as we entered instead of going down. That's okay. So yeah, anything else? Any questions? Any setups? Anything you want to look at, gold or otherwise? We have perhaps maybe 10-15 minutes that we can go through some stuff. I like to keep these sessions short and sweet so that we're not not bored. I'll have a look at the time that I entered in a minute. Divergence as above, still in play. Second attempt. See, if you have a strategy and you believe in your trading, you're not going to be phased by taking it again, having another stab at it. That's what we did. Gold's tanking. So if you don't have a strategy and you're just winging it and hoping for the best, and you get stopped out first attempt, you're going to be a little bit apprehensive and scared, basically, because you're not certain. And this game is all about probability, as you know, so certainty is never... Yeah, sorry, I didn't hear you.
Hey Alex, is it possible if you can teach us about the different types of divergence, so like hidden divergence, the normal divergence? I struggle normally.
Yeah.
I struggle normally with the divergence of it going up. So when it's at a low point and it's about to reverse back up, that type of divergence.
Interesting. I can comment on the divergence strategy that I've got. That's about it, really. I'm not really. I don't really have anything else in terms of divergence. You could talk about divergence all day long, but I've managed to whittle it down to what it is in essence, and create a simple strategy that works very powerfully and effectively. So what I've taught on the divergence video on my YouTube channel pretty much talks about this strategy and encompasses what divergence is. And not to say that that's all you need to know, but if you can understand what I've shown already, because this is what happens, isn't it? Like I see this happen in the chat groups, Discord, etc. You share something, and you fail to realise that there's work and backtesting and time and effort that's got into creating something, a masterpiece. Yeah. So then someone else comes along and says, oh, can you show me this? I'm like, well, I'm showing you I've already done all the work to show you what's relevant, so you don't need to look at anything else. But not to be forceful or rude or say, be passive aggressive and say, don't look at anything else, you're wasting your time because I've already done it. By all means, go out there and Google it and have a little look for yourself. But for me, I've already done the work to show you what I think works and where divergence is relevant. And so maybe master and focus on what I've already set up and put in place, because I've created a divergence strategy which should work, which does work. And so, yeah, I hope that makes sense. Because I think sometimes people just get so ahead of themselves. They get really excited. They're like, right, yeah, divergence. Okay, good. Like a puppy, new toy, that kind of effect. It's like, right, let's start looking at it. Divergence. Brilliant. Do that. I couldn't give you any more pointers to what I've already put in place with it, though, unfortunately. That would perhaps require me to then go back and look at divergence myself and pull it apart again and maybe pick out the best bits. But I've done that already. And I'd arrive at the same spot that I'm at now. Or maybe I'd do more research backtesting and maybe find some other little bits and pieces that I've missed. But for many, many years, I've just gone back to the board and made tweaks, and I'm hoping now that everything that I'm sharing is working and workable, and so I'm on hand to teach you or to help you, support you and guide you with what I am sharing. Yeah. Any more questions? 6.5, 7.5. Yeah, it's 9, isn't it? Not bad. That'll do. I need to go and work out the figures on that. Yeah, any more questions? So someone said Aussie, New Zealand. When you do top-down analysis, what time frame do you execute trades on? Oh yeah, good question. So top-down analysis, and let's pull up Aussie, New Zealand as well. So yeah, top-down analysis is generally looking at weekly charts, the monthly charts. You don't need to look at them. You don't need to look at them very often. So looking at weekly, last night, yesterday into today makes sense. At the start of the week makes sense. Then drill down to the daily, 4 hour, 1 hour. Just to be clear, I was saying yesterday. One of my children have just come in. Sorry. Yeah. So when I look at the top-down analysis and look for entries, I don't specifically say it has to be off that time frame or it has to be off that time frame. It's whatever time frame the setup is. And so with our strategies, we may identify divergence on the, like we did on the 1 hour, and on the daily as well. I might add for pound yen, it was divergence was showing as well on there on the daily. And so the more you see it, the more relevant it is in terms of multiple time frames, because that's just reinforcing what you're looking for. If that makes sense, there's no, I don't do, like some people have got this structure where they will have 2 charts up. I've seen that over the last week as well. 2 charts up, so they'll have the daily with the 1 hour, is it maybe, and then they'll have the 4 hour with the 15 minute, or they'll have the weekly with the 4 hour, and they have the 2 charts, and they just look to trade off those 2 charts, and they put them up on their on their screen side by side, and so they'll look for at the smaller time frame for the entry which they've identified off the higher, and that's loosely what I do. The Zoom call is lagging, is it? Okay, let's get rid of this because I was going to just update that. I just need to do one more thing on it, but we won't worry about that now. Yeah, so Aussie, New Zealand. So yeah, I do that. I do the top-down analysis. I do, but I tend to look at all the charts. I tend to ignore the 1 minute, 5 minute, 15 minute, 30 minute, all of that. And at best, I look at the hour. I use the smaller time frames for reference to maybe share some price action to see what, just to show you for illustration purposes what's going on. I may trade off those very rarely, but also that's only because I'm looking for an entry, a good entry. Yeah, so I do pretty much do that, but not so strict in terms of just having 2 charts, if that makes sense. I'm sorry about that. I'm sorry that it's lagging. We are recording this session live on YouTube, so you can watch it back, and we'll be finishing in about 3 minutes, so you can have a quick scroll through again the bits that you didn't hear properly. I want to keep the session short and sweet, so you can just benefit from it. But hopefully you've gained some information. Remember, everything we do it's free. It's all there for you. Just pick the best bits. It's a very difficult industry to make money in. You do need a 3 to 5 year plan, which I've illustrated that as well. Put in what I thought you need. It's not a walk in the park. It can really take its toll on you as well. So you need to be mindful of that. and yeah, you just do the best you can, and you know, when it comes to money, money's a bit of a sore point, sticking point with some and a lot of people actually. It's one of those things, isn't it? They say it's the root of all evil. So you need to understand what you're doing with it and be mindful, and yeah, because you know, it's either the making or the breaking of you. So again, that's what we talk about when we talk about 80% personal development. Spend 80% of the time developing yourself, improving yourself, making sure that what you're doing, how you're doing it is watertight, is efficient. Your strategies are working, they're back tested, and then you know you're not messing up, or you've reduced, you know, you've reduced all your blind spots so that you're not susceptible to making mistakes and then trying to recover from those mistakes, because that's what trading can be about as well. You do things and you make mistakes, and then you don't know, you're not equipped enough on a personal development. You could have all the experience and knowledge in the world, but with your personal development, if you haven't got that sorted, you don't know your own strengths, weaknesses, etc., then yeah, you're going to screw up big time, and you're just going to keep losing, and it's all going to be a bit of a nightmare. So 20% should be about trading, putting trades on, 10% buying, 10% selling, as they say, 80% sitting on your hands, looking at what is going on. Pick a handful of decent trade setups, cherry pick them, make your money, done. It's a process, and it'll take you as long as it takes. It's taken me years and years and years to get my head correct in understanding how to do this with minimum effort and you know, laser precision, and it's all about you. So yeah, it's still a work in progress, and it will be for the next however many years. I said I'll do it for a year or so, and we'll do it for a little bit longer. Share as much as I can. Again, there's no gimmicks, there's no funny business. It's just giving back as much as I can, and yeah, just hopefully you'll benefit from it. Okay, so Aussie New Zealand, it's range bound. Aussie New Zealand to a T is always range bound. It just goes up and down in this sort of range. It doesn't really do anything else. This is a daily chart. The average true range is quite small, so in terms of how much it moves each day. Yeah, join my Telegram. Have a look at the Telegram. Just talk to me on Telegram. So Telegram is, you know, you can just message me privately on Telegram, because I use Telegram. It's easy just to converse with people. At Alex_TYW. All right, have a good day, everyone.